Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Aris Mining. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Tyron Breitenbach, SVP of Capital Markets of Aris Mining Corp., which trades on the New York Stock Exchange American Exchange under the symbol ARMN and on the TSX under the symbol ARIS. Welcome, Tyron.
Thank you very much, and thanks to everyone this morning for making some time. So we are Aris Mining, and we are building the next million ounce a year gold producer, really focused on Latin America. So this is the obligatory forward-looking statements slide. I will be making some forward-looking statements. I encourage you to review our website, which has all of the technical supporting information. So why Aris Mining? I think what separates Aris from the other 2,000 gold companies listed on the TSX is really our four-pillared strategy. So first of all, we're a growth company. We are already a significant producer. We'll do about 230,000 ounces this year. And we have the inventory and resource base to support substantial growth. So we intend to produce close to 400,000 ounces by 2016, and that's fully funded and fully permitted. Which brings me to our second pillar, which is our cash and cash flow. So we have a robust balance sheet, which means we don't have to tap the equity markets for external capital. And I think that means as an investor, you're exposed to this growth without share dilution. Our third pillar here is the proven team. So Aris actually means again in the Celtic language. And that's because the founders of this company, Neil Woodyer, Ian Telfer, these gentlemen have created substantial value in the gold space. And they were the founders of companies like Endeavour Mining, Gold Corp, and Peter Moroney at Guyana, who is on our board as well. And so the fourth pillar is we don't control the gold price. We're very optimistic and constructive about the gold price, but while we're waiting for that gold window, as we bring more mines online and grow our production, we think our stock can achieve a better valuation. And I think that's the asymmetric value proposition that we offer to potential shareholders. I find that a lot of institutional investors are caught by surprise when they meet us. They're impressed by our level of inventory and growth and production. And I think one of the reasons we've been under the radar is because we moved so quickly. So the company was only founded essentially in 2021. Since then, we've done 3 deals and we've grown from a single asset developer to a multi-asset company with substantial production and free cash flow. As we get into the presentation, you're going to hear me talk a lot about small artisanal mining in Colombia. And so it's very interesting that about 80 to 85% of the gold in Colombia is mined informally. We view that as a fantastic opportunity. And the predecessor company to Aris, GCM, actually wrote the book on formalizing and partnerizing these small miners who are now our partners and basically act as contractors. And so at Segovia, which is our largest mine, we have 68 partnerships covering 3,000 people. The reason these partnerships work is because it's a win-win for the government, the communities, and our shareholders. For example, these artisanals are typically getting around 40 to 50% recoveries using their traditional processing methodology. We get 95% of the gold out of the rock. So there's a lot of margin there to split with these artisanal miners. And so we can produce cash flow without depleting our existing reserve. It's not our core business, but it's a wonderful opportunity and we believe is the right way to go about building a mining company in Colombia. And doing so at Segovia gives us credibility, which means we get our permits. And we recently were able to permit the lower mine at Marmato, which is the big asset that gets us to almost a doubling of production. And we view this as the right way to go about building a new Colombian mining company. So a quick snapshot of our company. As mentioned, we're doing 230,000 ounces a year, primarily from Segovia. We do have a little bit of production at Marmato. On the left of the page, you will see we've got substantial reserves and resources. So we do not need to take exploration risk. This is not an exploration discovery story. We have a ton of exploration upside, which I think every mining company needs to expose their shareholders to. But we've got the inventory to grow without taking exploration risk. So we have 2 producing assets in Colombia, 2 development assets, 1 in Colombia and 1 in Guyana. And as mentioned, we are fully funded to grow our current production profile to 400,000 ounces a year. So our flagship producer these days is Segovia. It's a high-grade underground mine. It's existed in one way or another for over 100 years. Our guidance this year is for around 210,000 ounces, and it's very low cost. You're going to see our all-in sustaining costs come in at sub $1,200 an ounce, which is lowest quartile for the sector. So the mine generates a lot of free cash flow. Last year, the asset did about $80 million US in free cash flow. Our goal here is to just maintain this production profile and keep doing this year after year. And this is essentially our ATM machine that funds the growth of our business. Some of the improvements have been around the edges. We recently installed a polymetallic plant that allows us to recover revenue from zinc and lead. It also means we have cleaner tailings that can be used for full in the community. If there is a pushback on Segovia, it's the shorter reserve life. So this is an asset that's had a 3 or 4 year reserve life for the last 5 to 10 years. So it's a narrow vein system. It needs a lot of drilling. And so typically you're replacing reserves rather than growing reserves. And that's just an attribute of these kind of high grade narrow vein deposits. But we have replaced reserves 4 or 5 years in a row. And we actually continue to grow our resource base. I take a lot of comfort from this image, which is an exploration map that really shows there are 30 known veins on the land package, but we're only mining 4 of those veins. So we expect to be here for a very long time. So moving on to Marmato, this is an exciting development for the company. So in July, we received an approval to go and build the lower mine. Marmato is an interesting asset because it's almost 2 mines in one. Historically, we've been mining the upper mine. This is a set of narrow vein epithermal veins. It's not as profitable as Segovia, and it's been producing around 25,000 ounces a year. It generates a little bit of free cash flow, but the real reason we're at Marmato is for the lower mine. And as you can see, that's a very different ore body. It's big, it's wide, it's chunky, and it's basically the intrusive feeder system for the upper mine. And it's that deposit that's going to allow us to grow from 230 to 400,000 ounces by 2026. And getting that permit, I think, was evidence that Colombia is open for business and that credible operators get permits and can build mines in Colombia. So Marmato Lower Mine, I think, is a company maker on its own. So you're talking about a deposit that'll do 160,000 ounces a year. It'll do that for 20 years on the reserve life. And on top of the reserves, we've got a total resource here of over 8 million ounces. So I personally think we're going to be here for 3 decades plus. Much like Segovia, it's very low cost. Our pre-feasibility study estimated all-in sustaining costs of about $1,000 an ounce, and that'll ensure that Aris Mining is a low-cost producer for the foreseeable future. The capital cost here is $280 million. That's an easily digestible amount for us. And construction starts this year. Our first gold pour is anticipated for Q3 2025. And as mentioned, we expect to be fully commercial by early 26. So just on the financing here, so capital is 280. We've spent about 17 million. We actually have a streaming agreement with Wheaton Precious Metals that'll bring in another 122. So we've got a huge buffer here, over $50 million. So even if there is a bit of capex creep, I think we're easily covered. And on the capex creep, this is an interesting situation because we're already on site at the upper mine. So we know what a unit of labor costs. We know what a unit of cement costs. So we feel very confident in that capital estimate. But again, we have a pretty substantial buffer for both our cash in treasury as well as the significant EBITDA that's being generated from the Segovia operations. So our third asset, and probably the one with the biggest NPV on it, is the Soto Norte project. So this is also in Colombia. It has a very interesting history. It was discovered in 2005 by a public Canadian company called Ventana. It was then acquired by a Brazilian billionaire taken private. I think the purchase price of the asset back then was 1.5 billion Canadian. And through a series of transactions, we've been able to get our hands on a right to acquire up to 50%. So this is a very exciting asset, very high grade, and really it's tier one in terms of economics and scale by any definition of the word. So you're looking at a feasibility study that estimated 450,000 ounces a year of production. And that's a pretty recent study, dated 2021. But the real highlight here are the very low all-in sustaining costs of $471 an ounce. And so the reason this costs are so low is you're talking about a big mine, 7,000 ton per day processing rate, but very, very high grades, 6 grams gold, an ounce of silver, and 0.2% copper. So that just drives the costs into the ground. We have a very solid joint venture partner in Mubadala. They are the sovereign wealth fund of the United Arab Emirates. They have a huge balance sheet, but they were looking for a Colombian partner to move this forward. So the asset is not permitted right now. And our goal here is to take our credibility that we've earned at Segovia, at our recent permitting of Marmato that we're going to start to build in a socially responsible way, and transporting that to Soto Norte. So Soto Norte doesn't have the mining history that a place like Segovia does, but we think we're the right group to bring in this Colombian socially conscious style of mining, work with the artisanal informal miners, and bring this asset into production. So what's unique about Soto Norte is we're close to something called the Paramo. That is a protected area up at elevation. And the way we're addressing the sensitivity of the area is we're coming in via an access tunnel 7 kilometers away. We're going to mine underground. That's not novel, but we're going to put a portion of the milling infrastructure underground as well. So the primary crusher will be underground, which means you're moving all of the dust, noise, and vibration underground with almost no footprint on surface at the ore body. So we're looking at the right way to build this. It's not the least expensive way to build the mine, right? There's a cost associated with doing things this way. But again, this asset is very robust, is very low cost, and can easily support this smaller footprint type of operation. In addition to the underground approach, we're going to be doing dry stack tailings. So there's no risk of a tailings pond failure, and we will be producing a concentrate, so there'll be no mercury or cyanide on site. And again, there's an existing artisanal presence, and those operators typically use mercury to recover the gold. So the status quo is not great. It needs a long-term solution, and I think that's where we come in, and we can work with the government to build a safe first world processing facility and to get this profitable ore body to surface in a socially conscious way. So here's a kind of a long section through the deposit. As you can see, it's very compact, it's very high grade, and I think it's going to be very exciting if we can get this permitted. It's going to take time because we're doing it the right way. And so the way I would encourage investors to look at Soto Norte is focus on Segovia and Marmato. That's our near-term cash flow, our near-term growth. We're going to be chipping away at Soto Norte in the background, hopefully submitting a new permitting application later this year. And then you're looking at a 1 to 2 year timeline. But to me, this is your free option because I think our stock right now is very inexpensive just when looking at our first 2 assets alone. So moving outside of Colombia, we do have a large project in Guyana. For those not familiar with the space, Guyana is an incredible economy. They've had a big offshore oil discovery, and I believe they might have the fastest growing GDP on the planet. I believe the GDP growth last year over year, was around 40%. In addition to the improving infrastructure, the country is wide open for business. It's an easy place to permit deposits. It's an English-speaking country that is very pro-mining, and the geology is spectacular. Once upon a time, the continent of South America, particularly Guyana, Brazil, was attached to West Africa, and there's a lot more advanced gold mines in West Africa than there are in Guyana. So it's pretty immature from a Western exploration standpoint, and we think it's got a very bright future ahead. So we're pleased to be here as our second geography. So the asset itself is a large open pit target. If you look at all categories, we're talking about 7 million ounces of gold here. very decent grade for an open pit. You're looking at about 1.4 grams plus. It is in the interior, so it does come with some infrastructure challenges. And when we took control of this project last year, the first thing we did was re-estimate the resource. That led to a reduction in resources from 10 million ounces on a global basis to about 7 million ounces. But we believe that the remaining resource is solid, buildable, and that's how we like to approach our assets with technical rigor. As a result of that resource adjustment, the prior PA was rendered obsolete. So right now, we're basically looking internally at how we're going to scope this asset. Should it be larger? Should it be smaller? Should it be open pit and underground? And we're looking forward to updating the market, hopefully in Q4 or early 2024. In terms of where we screen among peers, I think a lot of accounts are surprised to find out we've got almost as much gold as Eldorado. We are already a sizable producer. We produce more gold than Karora and K92. And of course, we've got a funded, permanent growth profile taking us to 400,000 ounces a year. And our operating team, who are largely the ex-Endeavor operating team, have a track record of putting mines into production on time and under budget. So I think that's a very low risk growth profile that investors are exposed to. In terms of market value, we're at the bottom of the group. And so I believe Aris is an execution story. We need to keep going at Segovia, build Marmato, and as we grow our EBITDA from $150 million, which is the estimate this year, to $400 million in 2026, we're hoping that the share price is going to have a corresponding re-rating. Just on our capital structure, we're pretty tight for a large company, 137 million shares out. I'm very proud of the fact that our management team and board together own 6% of the company. Most of that was acquired in a management-led private placement. We paid about $4.50 a share. So if you buy the stock today at the $3 Canadian level, you're making money before the management team is. We've picked up a lot of analyst coverage. This year, last time, we probably had one analyst covering us. We're now up to 7. Average target is around $7. And Canaccord recently made us their top pick in the junior producer space. We do have some institutional shareholders, but again, given how new we are, I think we're still getting out there and spreading the word. There are a significant number of warrants out. Those warrants actually trade. That being said, most of them strike at $5.50 a share Canadian. We're at around $3 Canadian today. So there's a lot of blue sky here before those warrants come into play. And if they are exercised, they bring in another $200 million in proceeds, which could help us at Soto Norte and Toroparu. So I don't view those warrants as an impediment right now. On the management team, I touched on this earlier. Neil Woodyer, our CEO, he founded Endeavor Mining. In his former life, he was an investment banker and a debt specialist. He started a mining company with a single asset in West Africa and built that into what is now a $7 billion company, and I believe the largest gold mining company in Africa. Ian Telfer, our chair, he started Gold Corp's predecessor, Wheaton, as a $20 million shell. At its peak, that had a $50 billion market cap. So these are entrepreneurial business people. They can attract capital. They can attract operating talent. And I will point out that this is Ian Telfer's only board seat. So he is very committed and owns a lot of stock. Peter Maroney on our board as well. He founded Yamana, built that into a multi-billion-dollar miner and recently exited to Agnico and Pan American. So a great individual to have on our board. Fantastic network of assets, people, and capital. We also have a number of Colombians on our board. I specifically would like to highlight Monica de Grave. So she was the justice minister in Colombia for a long time. She recently was appointed as a director of Ecopetrol. So she is the current president's nominee on that board, which is the national oil producer. So we're making an effort to add Colombian expertise and relationships to our board. And then I also need to mention Frank Giustra. He's a founder of the company, and he backed Neil on Endeavor, Leagold, and backed Telfer on Wheaton. He's a big shareholder, and again, just adds to our network of assets, capital, and people. So I like to think This helps make Aris the perfect stock for the generalist. We're not taking geologic risks, so you don't need to be a geologist, and you're co-investing with known mining entrepreneurs that have prior success. So I'll leave you with the valuation slide. So we have 7 analysts covering us. I picked this chart from Cormark Securities, but I think all of the brokers kind of have very similar numbers, with a little bit of variance around the edges. And so these are all of the producers listed on the TSX. And as you can see, the big companies like Barrick and Agnico, they get a premium multiple. Aris looks like it's not even on the same chart. So on the y-axis, you're looking at price to net asset value. On the x-axis, you're looking at price to cash flow, which is, probably a more tangible metric. We're inexpensive on both. So to even show up on the bottom of the chart, the stock basically needs to double. And so I think, this is the street saying you're a new company. All of your production is coming out of Colombia. So I believe as we execute, as we grow, as we show that this is sustainable, we will start to move up the rankings. And then what I also like to point out is if you look at Lundin Gold, single asset producer in Ecuador, but because the Lundins are involved, because they've executed flawlessly, they've actually got a premium multiple. So I believe we're a show me story, and we're just going to put our heads down and execute. So perhaps I will leave it at that and maybe run through the Q&A here. So a couple of questions. The first one is in regard to dividends or buybacks in 2024. That's an interesting question because our predecessor company, GCM, did have a history of paying dividends. But the reality was for them to grow, and I do believe that gold companies are growth companies, they would have to end the dividend and deploy the capital towards Toroparu. So for now, we have exciting, high margin assets to build, and we're going to focus all of our excess free cash flow on growth. When we have Marmato up and running, the company should be doing $300 million a year in EBITDA. At that point, we can look at buybacks or dividends. But for the foreseeable future, we're going to use all of our cash on growth. Another question is about the geographical risk in Colombia and Guyana. Are they supportive towards the mining industry? So Guyana is an easy one. I think very, very supportive. It's got to have one of the shortest permitting timeframes on the planet. I think as the world gets more mature, it's becoming more and more difficult to permit an asset regardless of where you are. I think in Canada now you're looking at 10 years plus to permit an asset. And so Colombia doesn't have a ton of Western operators, but we're very excited to be there. We think the geological upside is spectacular. And we think if you are a socially conscious operator, you're building a small footprint underground asset in a mining friendly area, you will have no issues getting your permits. If you're trying to build a super pit with a super tailings in a farming community, you might have some issues. But we found there to be a very practical, reasonable dialogue with the surrounding community. And then just another question here, asking about potential catalysts for a re-rating. So I think if we think about how, I'm going to go to the valuation chart again while I'm chatting. If we think about catalysts for a re-rating, I think it's execution. So we merged with GCM September last year. We've only owned Segovia for 2 or 3 quarters. Q1 was a little bit rocky. There was an explosive and detonator shortage in Colombia. So we missed our guidance. We press released August production, and it was a record for the asset. So it feels like the new team has gotten into a rhythm, and we've started to get Segovia humming. And I think if we build trust with the street, show consistent earnings, and double our production without issuing a share, I think that's a fantastic catalyst. Like, my simple question to the audience would be, if a mining company goes from 230 to 400,000 ounces a year without issuing equity over the next 18 months while keeping their costs low, all else being equal, does the stock go up? I think it does. So I think that's the biggest catalyst. And then just maybe one more question here, and it's related to Guyana and some of the infrastructure challenges. So Toroparu is a big project, 7 million ounces. very advanced, not quite shovel ready, but almost. And I think projects like that are rare. That being said, we are in the interior of the country, and Guyana has a very small population. They tend to hug the coast, but you're seeing a lot of that oil revenue being deployed to the interior. So these offshore oil rigs don't employ a lot of people. So the government knows that they need to take that cash flow and invest it into the interior in hydroelectric dams, roads, and mining endeavors. What I will point out is there's an operating mine called Aurora, about 40 kilometers from Toroparu. So that's obviously helped bring in a lot of infrastructure. So the infrastructure gets better every year. But absolutely, this is going to be a higher capex build than some of our other deposits. And that's one of the reasons we're focusing on building Marmato. We don't want to build two assets at the same time. But once Marmato is up and running, we will reassess our priorities and our balance sheet. And by then, we will have a new, fresh capital number for Toroparu. So with that, I would just like to thank everyone for their time, as well as for these engaging questions. So we've signed up for the conference. We have a couple of slots available. Please use the meeting scheduler if you would like to learn more. Alternatively, just reach out to me directly. We're standing by to kind of connect with shareholders and potential shareholders. We're very excited about the story. I think we're a young, fresh name and one of the few companies that is able to grow. And we're certainly, not going to surprise you with a big equity financing in the next couple of months. So thanks everyone for the time, and I hope you enjoy the rest of the conference.